This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. Growing fears of a U.S. strike on Iran set to send Asian stocks lower while extending a surge in oil prices. The S&P 500 falling while treasuries and the dollar edge higher on haven demand. The U.S. amasses an array of forces in the Middle East, with President Trump saying Iran has 15 days at most to strike a deal over its nuclear program. Also ahead, Blue Owl Capital restricts withdrawals from one of its private credit funds, raising fresh concern over risks in the $1.8 trillion market. Plus, we speak exclusively with the CEO of Japanese chip material supplier Resonac about their growth outlook amid surging AI demand. Now here's a look at markets. It's really that heightened geopolitical concern as the U.S. amasses forces in the Middle East. Those worries as well that Iran could shut down the Strait of Hormuz. This is, of course, a key global shipping lane. So we saw oil extending its surge. WTI spot prices above 66 a barrel. Spot and call buyers both at work here, as you can see on this chart. So there is demand for even greater upside protection. We're seeing gold rising along with the VIX. Bonds were more or less flat, a bit of pressure there as investors weigh the inflation risks from energy prices. Stocks also under pressure overnight following those private credit fears as well in the markets. And this is following on from Blue Owl restricting withdrawal. So it hit shares of some of these alternative asset managers as well. A reminder of the risk for retail investors. But overall, it was geopolitics casting a shadow over markets and the U.S. president suggesting that the diplomatic window for Iran may be closing. Take a listen.
We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
With the geopolitical uncertainties, we could see a risk-off session across Asia as well. You can see a sea of red already when it comes to futures and the early trading session on the ASX 200. Of course, we're watching very closely those energy-related shares. We've seen a lot of volatility in the metal space as well, so we're reacting to that. But the ASX 200 at the staggered open is a first loss in about 6 sessions. We already had a little bit of upside for the Aussie dollar because we had seen unemployment data beating to the upside in the previous session. So we'll be watching some FX moves as well as we continue to keep our eyes on the Japanese yen. Of course, a little bit of weakness given that risk-off sentiment sent the U.S. dollar higher on the other side of the trade. We're seeing Nikkei futures at the moment losing almost 1%. We do have CPI numbers coming out of Japan later this hour, so do watch out for that. Of course, anything to do with the energy gains, we are really watching inflationary pressures across Asia as well. The Nikkei right now, futures pointing to the downside, and the yen at that 155 level against the greenback. Joining us now is Barbara Slavin, Distinguished Fellow at the Stimson Center, to discuss all of the geopolitical risks right now surrounding Iran. She was previously director at the Future of Iran Initiative at the Atlantic Council and led a bipartisan task force on Iran. Barbara, really great to have you with us. Give us a little bit of perspective of how significant these moves are by the United States to send forces around Iran. We're hearing is the first time that we have such a massive force since the Iraq War.
Yeah, it's frankly very worrisome. I don't understand what the emergency is that requires the United States to contemplate military action against Iran. The country is at its weakest in many ways. Its nuclear and other facilities were hit last June, as you know, by Israel and the United States. Its currency is extremely weak. It's just coming off very significant protests, which were repressed brutally. It does seem as though this is some sort of play to try to overthrow the regime, which President Trump has mentioned as one of his goals. But you cannot conduct regime change with airstrikes. If there is something more to this plan, I'm certainly not aware of it. It's causing a lot of consternation in the United States, frankly, a lot of political opposition, certainly among Democrats and also among Republicans to some extent. Trump has not asked for any congressional authorization. He's given no explanation for why Iran is suddenly such a threat to U.S. interests.
Barbara, you mentioned the targeted attacks on Iran back in June, but of course we've also had the drug trafficking boats also being attacked, not to mention, of course, the extraction of Nicolas Maduro in Venezuela. How much bolder is the U.S. foreign policy towards these regimes getting recently, and what are the risks of this new approach?
Yeah, this is not what President Trump campaigned on. He didn't campaign on foreign adventures and regime change. It's really strange. It's as though he's channeled George W. Bush in some way. Again, I'm not privy to his personal thinking. He obviously believes that this is a strategy that can bring results. But we just had a very perfunctory session of talks in Geneva between President Trump's envoys and the Iranians. There was some talk about future negotiations and the Iranians promising to come forward with some concrete proposals, but the positions of the two sides seems very far apart. In the past, of course, we've had U.S. strikes while negotiations were supposedly still ongoing. So there's a lot of nervousness, frankly, that we might see strikes as soon as this weekend when all of these forces will be in place. The other factor, of course, is the Israeli factor. What are they hoping to get from this? Will they join in? Do they want to hit Iranian missile positions, perhaps, which is a key concern for them? Again, very, very little explanation, very little daylight, and this is really infuriating to people who thought President Trump would concentrate on domestic issues, and particularly the U.S. economy.
And to your point earlier about not having congressional approval, of course, this was also the case with Venezuela. But I wonder, given this backdrop, what is your sense of the extent in which there could still be a sort of deal on the nuclear program between the U.S. and Iran?
Well, that means that President Trump will have to accept something less than what he has suggested. The Iranians are perfectly willing to postpone, to stave off, suspend uranium enrichment for a number of years. They're willing to send out or dilute highly enriched uranium stockpiles, which they still possess. But they are not willing to say that they will never enrich uranium on Iranian soil. They believe this is their right. They also have ruled out any talks on their missiles or on their relationship with regional partners, which have also been mentioned as demands on the part of President Trump. He's also talked about regime change in a very cavalier fashion and suggested that would be a wonderful outcome. But again, I fail to see how attacking Iran now will bring about that regime change. It could bring about more chaos. It could bring about some civil strife, maybe more protests. But the Iranian government has been preparing for a long time now and expecting, frankly, new Israeli and American strikes. And I'm sure they have plans for pretty much whatever Trump is contemplating.
Barbara, on those issues on regional forces, can you also talk to us about how things have changed between Iran and some of its proxies in the past year? How much has its influence shifted?
Well, Iran is certainly much weaker than it was a couple of years ago, primarily because of the blows struck against Hezbollah in Lebanon and also the fall of the Assad regime in Syria a couple of years ago. But Iran still has relationships with the Houthis in Yemen, which can disrupt shipping in the Red Sea. It has relationships with militias in Iraq, which may be called upon to attack U.S. bases, U.S. personnel still in Iraq. It is not without resources. And I think this is an extremely dangerous situation where, escalation can certainly happen rather suddenly. The U.S. has 30 to 40,000 personnel stationed at bases in some 8 countries in the region. Many of them can be reached by Iranian missiles and rockets. The U.S. has, of course, means of defending these places, but I think what we've seen in the past is that Iranian retaliation has been telegraphed and pro forma. No Americans have been killed, and I don't feel as confident that that can be the case this time. I think the Iranian regime may feel that its back is to the wall and it may simply let fly with whatever it has. Trump has been lucky in these military adventures of his. He's not lost American lives. If that changes, that's really going to affect his status in the United States. We have midterm elections coming. I'm trying to imagine what he is thinking. Now, maybe there is some deal that still can be reached. Of course, he's perfectly capable of declaring victory, even if the deal is not much of an improvement on previous agreements with the Iranians. But if so, why all of this amassing of American military power? Why these threats? What's the strategy? What's the goal? We are frankly all rather confused here.
Barbara, thanks for outlining some of these questions we have on our minds, and great to get your insights. Barbara Slavin is Distinguished Fellow at the Stimson Center. Now let's take a closer look at the market reaction. Bring in Bloomberg MLive strategist Brendan Fagan. Brendan, as we've been hearing, it's really the idea that, okay, the Strait of Hormuz could see some disruption, but also if this is a conflict or military action by the U.S., how long drawn out it might actually be. What are you seeing in terms of the pricing in markets, particularly with oil? How appropriately are things positioned?
Well, I think things are finally balanced between the story of geopolitical risk in the near term and the longer term supply glut that still remains. You still have OPEC Plus flooding the market. We now have Venezuelan barrels online. So it's pretty interesting seeing the divergence there. But the interesting thing surrounding the Iran conflict is that a couple weeks ago, you were looking at pretty sizable upticks in interest in the 65, 70, 75 strikes in WTI. But that's starting to move out both in expiration and move higher in strike. So you're seeing traders positioned for possibly a prolonged conflict, looking at the November expiration is a big one in the 100 strike calls. So you're looking at a longer conflict possibly, but also much higher in strike price, which seems to say the traders think that oil can go much higher than where it is currently.
Brendan, in the broader market, though, when it comes to these geopolitical headlines, how long does the risk premium last at a time when we have to contend with fundamental issues like we do have the Fed's preferred gauge of inflation, PCE, coming up, not to mention, of course, the rotation out of tech?
Well, I think the big thing here is it'll last as long as we have uncertainty. And unfortunately, we have a lot of that at the moment. As you mentioned, geopolitical risk. Tomorrow's an opinion day at the Supreme Court, so that is overhanging. No guarantee we get that. We still have data coming in, and we have Fed speakers who are constantly changing their tune. It seems like we had a hawkish shift in the minutes, and then Stephen Myron still came out and said he doesn't see as accommodative as a path as previous, albeit he still sees 100 basis points of cuts this year. So there are a lot of factors to deal with here, and uncertainty is just not something that can really drive risk much higher in the near term.
Talk to us a bit more also about what macro traders are saying or thinking in terms of this spike in energy prices and the impact potentially on inflation and what that might mean for central bank policy making.
I think the big thing there that they're saying is that we would need a much more prolonged spike in energy prices for that to feed through to inflation. So that isn't just a worry yet, but it goes back to what I said, that if we have this prolonged conflict in the Middle East that does drive crude up to, let's say, $90, $100 a barrel, and we stay there for a few months, then you'll see the feed through. But the big thing that I hear from rates traders, particularly in the Treasury complex, goes back to tariffs and the questions around this ruling. You know, a lot of the things I hear is that we might get more questions out of a ruling than we get answers. And people seem to be very concerned with refunds, what that means for funding needs for the government, how we may plug a hole if there are refunds. So that directly relates to monetary policy, and that seems to be the big driver from traders that I talk to now.
Brendan Fagan, always good to get your perspective. Bloomberg MLive strategist there with the markets as we continue to watch some of these Aussie moves, especially in the energy sector. Of course, we have seen oil continuing to extend gains after settling at the highest level since August in the Wall Street session. It did pare back some of those gains on the report that President Trump was weighing a limited strike on Iran. But we can see right now that those oil majors are gaining ground early in the staggered session in Australia. And of course, it's earnings season, so we're also reacting to that. Take a look at Guzman y Gomez. This is an Australian restaurant operator. They plan to open new stores at almost a rate of 3 a month across Australia this year. They reported a surge in half-year profit on Friday. Their net income jumped 45% in the 6 months ending in December, Avril.
Yeah, Shery, talking about corporate results coming up on the Asia trade. Don't miss our exclusive conversation with Japanese chemicals and advanced materials company Resonac on their earnings and business outlook. Plus, we'll discuss investment strategy and the market outlook with IG International. Much more ahead. This is Bloomberg.
President Trump has declared victory in the fight over U.S. cost of living concerns as affordability issues have become the central focus of the upcoming congressional elections.
Word have you not heard over the last 2 weeks? Affordability. Because I've won. I've won affordability.
Let's bring in our Washington Deputy Bureau Chief, Laura Davison. And Laura, I gotta be honest, I almost missed this whole story because we've been so distracted by everything that's happening around Iran. And of course, recently we saw the extraction of Nicolás Maduro in Venezuela. We're seeing so many other geopolitical concerns at the moment. I wonder if the American public is even paying attention to this. And now the president is declaring victory here. What exactly is it saying?
So you really have a disconnect here about what Trump is saying publicly, saying, look, affordability is solved. We can move on from that. And his advisors and Republicans around him who have to run for re-election really worried about this affordability issue. I can imagine that clip you just showed of Trump saying he won on affordability. That's something that Democrats are going to pull and run in campaign ads and show the data, show the concerning job numbers and other issues here that are likely to be key issues that we know from voters going into the November elections that they're very concerned about. His approvals, especially on economic issues, are at their lowest levels ever. And this is going to be a huge problem. We see them talking about, whether there would be housing plans or specific plans to roll back the tariffs on steel and aluminum. This is an acknowledgement from at least the lower levels of the administration that these are issues that they need to address. But Trump does not seem inclined to lean into those.
Hey, Laura, can I just pick up on that point as well? I mean, if he's declaring a win on affordability at a time where, given the way oil prices are trending, we could see upward pressure on prices at the pump. Does that also factor into the cost of living pressures for the ordinary American? And what is that going to mean as we head into the midterms?
Yes, that weighs heavily. We've seen inflation kind of really be kind of bumpy and patchy, of having certain areas where prices have come way down, but other areas like in energy and meat, for example, where we've really seen prices continue to soar. Trump campaigned in the presidential election 2 years ago on getting the price of gasoline down to below $2 a gallon. That's highly unlikely to come to fruition, regardless of any geopolitical situation, but particularly as we see tensions ramp up in Iran, we could see oil prices continue to spike, causing widespread concern about energy prices at the pump as people head into the summer travel season.
Laura, many thanks. Our Bloomberg Washington Deputy Bureau Chief Laura Davison. Now let's talk about South Korea as well, because former President Yoon Suk-yeol has been sentenced to life in prison after being found guilty of leading an insurrection through his 2024 martial law declaration. Yoon's lawyers have denounced the ruling as politically motivated and vowed to fight until the end. Let's bring in Seoul editor Denny Thomas for more. So, Denny, perhaps as some anticipated, there could be a sort of appeal. And, his lawyer is talking about fighting to the end. What might such a process look like, and how much longer does this draw out the case?
Yeah, so it's not very clear how long when the fight back will come, but definitely the indications are that they might appeal this ruling. I think clearly a lot of people were expecting a much bigger kind of a penalty as a death penalty. The fact that that did not come through probably is giving the Yoon camp a bit more of a thought whether how should they proceed with this next leg of this legal battle. But as of now, there's no indication they're going to launch a fight back, but it looks like that they might do, just to make the case that they don't agree with what the judge and the prosecutors have done.
And then this is going to keep the main opposition party pretty distracted. How does this, in a way, give an upper hand to President Lee and his policies in the country?
So definitely this is, from that perspective, it's a kind of it draws a line in the sand. Lee and his presidency can now look forward a bit more confidently about not being distracted. On the other side, I think the conservatives are still reeling with this kind of impact of this almost 2-year-old episode, and they're still not coming to terms with the fact that this has happened, and so they have to rally around a new leader, and that process will take, and till such time Lee will have the confidence of pushing ahead with this agenda.
Bloomberg Seoul Bureau Editor Danny Thomas there with the latest from Seoul. We do have more ahead on the Asia trade. This is Bloomberg.
Here are some top global headlines we're following as well. Andrew Mountbatten Windsor, former prince and brother of the UK's King Charles, has been released under investigation after being arrested on suspicion of misconduct in public office. The arrest came after further details emerged of his relationship with convicted sex offender Jeffrey Epstein. Mountbatten Windsor has consistently denied any wrongdoing. King Charles issued a statement outlining his deepest concern about the matter and promised Buckingham Palace's full and wholehearted support and cooperation with investigating authorities. President Trump says his Board of Peace has received roughly $17 billion in pledges toward humanitarian and reconstruction efforts in Gaza. He also says more than half a dozen countries have promised personnel for a stabilization force in the war-torn territory. The updates come as major questions remain over wresting control of the territory from Hamas, which has refused to give up its weapons. Minneapolis Fed President Neil Kashkari has accused National Economic Council Director Kevin Hassett of trying to undermine Fed independence. That's after Hassett criticized the New York Fed economist study, which found U.S. companies bear most of the burden from President Trump's tariff hikes. Kashkari defended the study, saying research conducted by Fed district banks reflects efforts to learn more about the economy.
I thought that Director Hassett's comments, though, he went on and he said that he disagreed with the results and the researchers should be punished or they should be disciplined for their conclusions. I think this is just another step to try to compromise the Fed's independence. Over the last year, we've seen multiple attempts to try to compromise the Fed's independence, including in December when the Department of Justice served a subpoena to the Board of Governors over some building expenses. It's really about monetary policy.
We actually also heard from Fed Governor Stephen Miller dialing back some of his calls for how deeply the Fed should cut rates. And it's really that calculation that's also leading to traders in the commodity space to rethink where the Fed is going from here. Of course, we have had stronger than expected unemployment data. We are watching ahead for the Fed's preferred gauge of inflation, the PCE numbers as well. But we have seen from the FOMC minutes that several policymakers have actually discussed raising the interest rate if inflation continues to pressure the economy. And of course, we're also contending with geopolitical tensions, all of that risk premium being added to the market. So we are seeing oil prices continue to gain ground and gold, silver, precious metals moving on also calculations of where the Fed goes from here. More ahead on the Asia trade. This is Bloomberg. We have breaking news out of Japan. We are getting the latest CPI numbers, growth of 1.5% for the month of January. This is a sharp deceleration from the pace that was more than 2% in the previous month. Year on year is also surpassing economists' expectations on how fast CPI is slowing down. Now, exclude fresh food for the core CPI number is growth of 2% for the month of January. Exclude energy as well, core CPI, 2.6% growth in the month of January, which is, again, a deceleration from the previous month, is also coming in much slower than economists had expected. This is really interesting because this has implications for the Bank of Japan. Of course, we have seen higher base effects from last year, softer energy costs, perhaps fewer Chinese tourists also are really putting pressure on services prices. But what does that mean for the Bank of Japan is the key question. For more on the outlook for Japan, let's bring in economy and government reporter Erika Yokoyama. Erika, as I mentioned, How can the BOJ justify its tightening path if you have inflation decelerating so fast?
Sure. Yeah, the inflation slowdown is pretty significant, but I actually don't think I don't think it has a much impact on the BOJ's rate hike path or timing. Much of the slowdown is actually, as you said, driven by Takahachi's price relief measure, including utility subsidy, which kicked in January. And authorities have been kept saying that they are focused on underlying trend rather than one-off factors. And core trend still looks pretty solid, actually. So big picture still remain unchanged. And, in the meantime, slower inflation is a positive development as well because it can help real wages grow after they have been falling for a full year in 2025. Sustained wage growth has been one of the key elements that the BOJ has been seeking for further rate increases. So I think overall the current backdrop keeps the door open for the BOJ's rate hike as early as in April with some outside risk on March 19th.
The worry is, I guess, that fiscal tension with the Japanese government versus the BOJ. I mean, what does this potentially imply for the Japanese government, what we are seeing today from the CPI print?
Well, still today's data shows food inflation remains elevated. So I think that would add some momentum to debate over consumption tax cut that's been talking for a while. And following her landslide victory in the election earlier this month, Takahashi preached to accelerate discussion over suspending sales tax on food for 2 years. And key question still remains, of course, how quickly the government can implement the measures and how it will be financed. And another thing Takahashi actually needs to take care in terms of price outlook is the trajectory of the currency. Some of the Takahashi remarks emphasizing the merit of weak yen previously led to the slide of the yen, right? So it has been the major driver for inflation in Japan. And the diet session resumed today, and Takahashi will have a lot of opportunity to speak. So she will need to be really careful of her remarks not to reignite such sentiment again.
Erica, as we speak, we're seeing a perhaps knee-jerk reaction to the data and that spike in dollar yen. Thank you so much for running us through the numbers and the outlook for Japan inflation. Bloomberg Tokyo economy and government reporter Erica Yokoyama. Now, in terms of markets, it wasn't just about the geopolitical risk. The private credit fears also affecting markets overall, where we saw Blue Owl Capital saying it would restrict withdrawals from one of its retail-focused private credit funds. And the move reverses a previous plan to resume redemptions this quarter. Let's go to New York, bring in our private credit reporter, Olivia Fishlow. So, Olivia, we are seeing perhaps the background concerns coming a bit more to the fore in terms of these risks surrounding private credit, especially given their exposure to software and AI. What does all this mean for retail investors?
Yeah, definitely. It's a great question. And I think one thing that this fund really highlights is retail investors should be aware of the illiquid nature of these investments. So a lot of these private credit funds, right, they invest in loans that don't really trade, but then they sell these funds to retail investors and with the promise of some form of liquidity. And so far we've seen, Blue Owl was able to return capital to investors. But I think broadly down the line, it sort of raises the question of how do investors get money back when something like this happens to the fund?
They can periodically request redemptions, right? Give us a sense of how easy this is for retail investors to do and what the risks are around even these funds when investors flee them.
Definitely, right. So for some of these funds which don't trade publicly, investors have the option every quarter to receive money back, and that's typically limited at around 5% of the fund, which, is said at the beginning when you invest in it just to protect all investors. And what we saw actually was earlier this year, this fund had redemptions beyond 5%. It actually reached around 6%. And following that, Blue Owl decided to try to merge it with another public vehicle. And it later postponed that merger and scrapped it because that would have forced investors to take some losses. But so that was a solution that it had to meet the elevated redemption requests. And then now we see the new solution is to sell loans and then to return that capital to investors. So even though these funds say that, yes, there's a 5% amount that you can get every quarter, if requests go above that amount, it can be hard for the fund to fulfill those requests. And we've seen them do it so far. But I think, the question and the risk is, will this continue to be fulfilled?
Yeah, especially at a time when the likes of Bank of America is committing $25 billion of its cash for private credit deals. So perhaps this episode also a reminder, I guess, timely one, of the risks in private credit. Bloomberg private credit reporter Olivia Fishlow, thank you so much. We have more ahead on the Asia trade. This is Bloomberg.
From Hello Kitty to Demon Slayer, Japan's pop culture is now the country's second most valuable export after cars and also outpacing semiconductors. Bloomberg's been looking into the moguls turning kawaii and anime into $1 billion empires and driven Japan's soft power boom. Let's bring in Japan Equities reporter Alice French for more on this. This is really interesting, and a lot of these brands we can definitely recognize. Who stand out to you?
Yeah, morning. So look, what we kind of wanted to do with this list was bring some new names, right? I think people are quite familiar with the Sonys and the fast retailings and the Nintendos of the world, but we wanted to highlight kind of some of those names from the gaming sector and, like you say, the pop culture sector that people perhaps are not so familiar with. For me, I've obviously been covering gaming a lot from the kind of stock market perspective. So Capcom is in there, Konami is in there, Bandai Namco, also Koei Tecmo, which is actually a married couple who are in charge of the fortune, and the wife Keiko is also very, very good at picking stocks, actually, and she now runs kind of the fund management arm of the company. So it's interesting to kind of see those other the diversification of these companies and how they've sort of built out their fortunes. Also, it's not just gaming and IP. This kind of Japan boom that has really kind of surged since the pandemic, partly because of the weak yen, is driven a lot by tourism, right? So we have APA in there. I think anyone who's been on a trip to Japan recently probably is familiar with their hotels. They have very reasonably priced rooms, very compact rooms, but very comfortable. Some of them even have the kind of hot spring style baths as well. So it's kind of built on that sort of live experience tourism as well as the IP.
Alice, it's really interesting, this list, because it also differs quite a fair bit from, say, people that have created wealth from heavy industry. But talk to us how exactly Japanese pop culture has become such a wealth creation engine.
Yeah, I mean, look, I think this kind of idea of cool Japan and kind of the popularity of Japanese culture is not something new, but what's really kind of boomed in the last few years is the tourism section, right? I think since COVID, we have seen this influx of numbers. We're having record numbers of tourists, coming into the country every year, partly because of the weak yen, but also I do think kind of during the pandemic and during lockdown, a lot of people did get into, Japanese pop culture, whether that be anime, gaming, manga. We were all stuck at home, right? And I think in that sense, Japanese culture really kind of came into its own. I think also the companies themselves have really been focusing on kind of global expansion and diversification, right? If you look at the gaming companies, for example, it's not just the games and the consoles that they're making. They're branching out into, things like figurines, doing collaborations with other brands, really, going hard on social media and things, producing more kind of English language content to kind of speak to the global audience. And of course, the backdrop for all of this is the historically weak yen that we've seen over the past couple of years. I know we've seen it strengthen a little bit in the last few weeks, but it's still very weak, and it's cheap to travel here, right? And that has definitely boosted the popularity of Japan as a whole.
Alice French, Bloomberg's Japan Equities reporter. Great story. Do check it out. The billionaires behind Japan's cultural icons. Let's actually talk more about Japan's growing and resurgent, perhaps soft power. With us now is Matt Alt, author of Pure Invention, How Japan's Pop Culture Conquered the World. Matt, great to have you in studio here.
Pleasure.
Why is Japanese products, Japanese IP so popular in the world?
Well, Japanese products are popular around the world not simply because they're well made, but also, I believe, because they answer questions that a lot of the outside world hadn't thought to ask yet. Japan hit certain milestones of what you might call post-industrial nations ahead of the societies outside of the world in the West. And so the products that it started to make in the post-war era, the karaoke machine, Walkmans, video games for adults, comic books, manga, anime, all of this sort of thing appealed to audiences that were not being served well in the Western markets.
Everything that you listed right now, manga, video games, this IP, everything related to Hello Kitty. How viable is this intellectual property in an age of artificial intelligence when anybody can just fake it out there?
There are grave dangers to the Japanese content production sector now posed by AI. And fortunately, in Japan, the authorities have taken note of this. Even though the Japanese government has stated that they want to make Japan one of the world's most friendly countries to AI development, they know that they can't do this without putting protections in place for the creators that make the content that are becoming a sort of pillar for the Japanese economy right now. So there are being guardrails put in place to preclude AI companies from training on Japanese content or producing content that resembles too closely things coming out of Japan. But it is a fact right now that many of the big AI companies are training their large language models on Japanese content.
And this is a global issue, isn't it?
This is absolutely a global issue.
Which needs more coordination with other governments as well. How well has Japan done that also in terms of distributing their products and content overseas?
I think Japanese companies are very good at finding partners abroad who understand the local sorts of environments where the products are sold. Traditionally, that's how the Japanese content producers have handled this. They've taken a largely hands-off approach. That's been changing in recent years. We've seen a lot of consolidations in the Japanese entertainment sector, with companies such as Toho acquiring distributors abroad and making pipelines so that they can deliver the content directly to consumers abroad. I think this is one of the biggest shifts in what you might call the Cool Japan delivery strategy, where we're specifically seeing Japanese companies reaching out to foreign audiences with nobody in between.
Matt, it's really interesting because I remember a time where it was really the heyday of J-pop. And then K-pop kind of took over, and then we're seeing a bit of a resurgence in J-pop at the moment. Talk to us about perhaps how these two differ in a way, or are there similarities?
Well, I think one of the biggest differences between Japan and Korea in this front is that the Korean government is much more aggressive about supporting its content production industries than Japan is. And then you also see other issues. In Japan, traditionally, content rights owners would actually have content taken down from places like YouTube. So there wasn't a way for consumers abroad to really consume J-pop in the way that they could K-pop. Now we're seeing a really interesting resurgence of Japanese pop music in the form of the background music and the title songs for animated series. So there's a kind of back door that these Japanese musicians and content producers are using to get and win hearts and minds abroad.
So with that in mind, and perhaps some of the challenges related to IP for Japanese companies, how do you think they can strategize and exactly expand, capitalize on their culture capital, so to speak?
I've spoken to a lot of content producers in Japan in the film, television, manga, anime, and toy production worlds, and one of the number one things that I have heard is to focus on the home market first. People love things from Japan because they're Japanese, and so when Japanese creators try to appeal to Western audiences, they often slip up. So you're seeing now a kind of, in a good way, an inward focus, a focus on the internal market, and what Japanese audiences like tends to be what foreign audiences like now, because audiences around the world who have been raised on so much Japanese pop culture have now synchronized their tastes with the Japanese marketplace. So I think there's very fertile ground for expansion abroad, with Japanese producers doing exactly what they've been doing for the last 50 to 60 years.
How supportive is the Japanese government in helping all of that? Because you mentioned how the Koreans are doing it very well. But when it comes to not only just IP, but the entertainment industry overall, right, even production of movies, for example.
Well, Prime Minister Takahashi has pledged to raise the amount of money that the Japanese government is using to help promote Japanese products. And we are seeing this not only in the form of the promotion of the products themselves, but also in the support of all of the businesses that go into making the products, such as not only animating, but translating, localizing, all of these sort of ancillary services. So finally, the Japanese government seems to have woken up to the fact that if you don't fertilize this garden, so to speak, it won't grow.
The issue with trying to promote your country's products is also that when your country has geopolitical issues with other countries, they're at risk. How effective has the separation been when it comes to geopolitics, the tensions with China, with just cultural content of Japan, or have they been hit together?
Well, if you put all of your eggs in one basket, so to speak, and you are using tourism as one of your main pillars of economic growth, anything that you do that upsets people around you has a potential to kind of damage that growth. And in particular, Japan has, I think, succeeded in a big way by staying out of the headlines in a lot of ways. Japan used to be, in the 1980s, when I was growing up, a kind of economic tiger. In my country, in my home country of America, there was a lot of what was called Japan bashing. But after the Japanese economy crashed and the bubble burst, Japan kind of faded out of the headlines. And that turned into, ironically, a great strength of Japan. It became this blank slate that people could project their own attitudes and values upon. The more Japan manifests itself in the geopolitical sphere, the more that Japan starts to take an active role in military, economic, and geopolitical sorts of strategies and things like that, the bigger a danger there is that it is going to lose its soft power, that it is going to lose the kind of cultural charisma that it's built up over the years. It's a very delicate balance.
Great perspective, Matt Alt. Really good to have you with us, author of Pure Invention, here in our Tokyo studio. And of course, we were talking about J content. We'll talk about K content as well. Fans of the Netflix animated film K-pop Demon Hunters are in for a long wait for the sequel. The streaming giant finalized deals for a second movie with Sony Pictures Animation, the studio that developed the demon-slashing hit. But creator Maggie Kang told Bloomberg exclusively not to expect an encore to hit screens anytime soon.
I don't know what I will do next. I really don't. But I can't really share that at the moment. But
there's a sequel, surely.
I mean, I can't really say that officially, but I would say I would be shocked. I mean, in a world where that loves sequels, I don't think it's a surprise that something else could be coming. But I don't know. It's going to be a long wait for anything, unfortunately.
Why?
Animation just takes a long time. It's just...
well, does it have to be animation? What about a live-action version?
I really think there's so much that the animation medium brings to the film, the tone of the movie, the types of characters that we were able to create, the type of comedy that we were able to push, the drama. So I firmly believe that the movie couldn't have seen the success if it was live action.
And you can watch the full conversation between Maggie Kang and Michelle Hussein on Bloomberg.com/videos or listen wherever you get your podcasts. A reminder of our new online feature, the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check out Bloomberg.com/videos. This is Bloomberg. The latest from the corporate front. Netflix co-CEO Ted Sarandos says the streaming giant's bid to acquire Warner Brothers Discovery will offer great value to shareholders of both companies. He says a merger would lead to more films in theaters if the deal goes through, addressing a key complaint from Hollywood. Netflix is vying with Paramount's Skydance to buy Warner's studios and streaming business.
We think this deal will have a positive impact on the business for the long term. Remember, what we're doing in buying these assets is we've been creating original programming on Netflix for about a decade. They've been making original films and series for about 100 years. They have incredible IP, and we just happen to have a consumer model that can better maximize the returns on that IP. So I think it's a great long-term outcome.
Blue Owl shares plunged in New York after the alternative investment firm said it would restrict withdrawals from one of its retail-focused private credit funds. The company says the fund will instead return capital through periodic distributions funded by loan repayments, asset sales, or other transactions. The move highlights the risk confronting retail investors entering the fast-growing private credit market. Walmart sounded a warning on the U.S. economy, saying a hiring recession and pressure on shoppers will hold back earnings growth this year. The company points to rising student loan delinquencies, trade uncertainty, and growing concerns about job security. Walmart says consumers are still prioritizing value, but the spending gap between low and high-income households remains wide. Shery?
And we could be setting up for a risk-off session across Asia as geopolitical tensions continue, with the U.S. amassing forces in the Middle East, and of course oil prices also reacting to geopolitical tensions with Iran. You can see this early session on the ASX 200 pointing to some downside, and Nikkei futures also pointing down 0.9%. We're also digesting the latest core CPI numbers out of Japan, beating expectations. But coming up, we'll also be discussing with the CEO of chip material supplier Resonac about the broader AI demand, so stick around. The market opens are next. This is the Asia Trade. We're counting down to Asia's major market opens, embracing for what could potentially be a risk-off session. Avril, of course, we saw the downside pressure on Wall Street around geopolitical tensions with Iran, and oil prices already reacting at the highest levels since August.
Yeah, and among the risks, I guess, for markets overnight was also these fears of private credit and the exposure from the AI sector, software-related stocks as well. So we saw those alternative asset managers also getting affected in the session. It'll be interesting to see what this means for Asia, if it means anything at all.
Yeah, especially given that we have seen really those gains across Asian equity markets, right? We have seen the Nikkei gain ground on Japanese yen weakness, which has been exacerbated by the US dollar strength that we saw overnight. At the moment, we're seeing it trade at that 155 level already against the greenback, as we're, of course, digesting also the latest inflation number, slowing to the slowest pace in more than 2 years. So we actually saw the headline inflation number here in Japan beating to the downside and coming in actually slower than economists had expected, and also below that 2% level. That's the BOJ target, and it has been surpassing that for more than 3.5 years. You can see right now the Nikkei down 0.9%. Of course, do watch out for those energy-related stocks. And the JGB space, 212 is a 10-year yield. We had a sort of less than expected demand when it came to the 20-year auction in the previous session. Also, take a look at how Korea is opening, because we were already at a record high after coming back from the Lunar New Year holidays. We did still have some pressure on the Korean won, and we continue to be at around that 1450 level. A little bit of divergence always with the tech-heavy Kosdaq as well, Avril.
Yeah, you talk about the Japan inflation print. I do wonder, given the spike in energy prices that we are seeing, and with oil holding most of the gains from the past year, I think roughly the 6-month highs, it's interesting to see if this affects some of the central bank policy making, if at all, right? So worth unpacking as well what we're seeing in treasuries, pretty flat. You are seeing a bit higher on the 10-year in terms of a yield, so still supported. In terms of the stock market overnight, it was quite interesting to see how the tech bounce from the previous session didn't really hold. Tech reverse, so maybe not that convincing. And don't forget as well, next week we have those NVIDIA earnings, the extent in which is going to be a catalyst for markets, especially given all these AI disruption fears. Let's unpack with Fabien Yip. She is market analyst at IG International. Fabien, good to see you. So we're talking about, the geopolitical risks that we've been seeing creeping back into the markets now, particularly with energy prices. I wonder what that means for risk in Asia on a day like that and going into next week as well.
Well, as you mentioned, some of the key markets like Hong Kong are returning to trade after the Lunar New Year holiday. I think the sentiments in the US will definitely overflow, especially after we've seen a pretty strong performance in Asian markets last year as well as start of this year. Investors are getting increasingly nervous about any bad news. So everything has been priced almost to perfection. And if we have any negative news, be it from the AI front or from a geopolitical tension perspective, that could have a toll on Asian equities as well as risky assets.
Does that include the specter of perhaps an impact or read-through into inflation and central bank policy making? At a time where, just this week, we saw from the Fed minutes that officials are chattering about a potential rate hikes in the months ahead. Maybe the markets are more focused on the back half of the year. But, what are you seeing in terms of perhaps central bank divergence at this stage?
Yeah, I think it's a very interesting landscape that we're in right now. If you look back 2 years ago, most of the developed market central banks are looking to cut rates because of the pandemic impact. But fast forwarding to 2026, we're seeing a pretty big divergence in central bank policies where the US, while we're seeing, several governors talking about potential rate hikes, I think most of them are agreeable on either staying put or even cutting rates in a 1-year horizon. Bank of England is looking to cut. Meanwhile, Japan and Australia is probably in a path to hike. And the ECB is probably going to stay put in the next year. So with that divergence we're seeing in central bank policies, it's actually driven a lot of interesting trading opportunities, be it in Asian FX or globally. So I think an interesting thing to watch, since you mentioned about inflation, Australia and Japan, two very interesting countries that we're watching right now. In Japan, we just had the core inflation print. Like what Shery has mentioned, it's something that's quite comforting for the market because core inflation has been running about that 2% mark for more than 3.5 years. And now it seems like the inflation print has returned to the central bank's range. And what's that telling us, right? If you look at the GDP numbers that was also released earlier this week in Japan, putting these two factors together, it looks like the Bank of Japan's cautious path to hike has been working because if they've been aggressively hiking rates, it could be quite vulnerable for the Japanese economy. And pairing that with Takahashi's administration, how they plan to spend more on fiscal support, that's actually pretty good news for Japan. If Bank of Japan is not too aggressively hiking rates, that would provide a bit more room for the administration to release these fiscal policies.
Fabien, just expanding on Avril's point and something you mentioned earlier, what are the interesting trading opportunities that we're seeing because of that divergence and all of these central bank themes?
I think a lot of the fundamental factors are pointing to a pretty weak dollar. So if you look at central bank policies, is probably one of the more kind of dovish central banks. And at the same time, if you look at hedging needs, so international investors are hedging out on their US positions. And at the same time, the political stability in the US and how policies have not been extremely clear. These are also driving a bit of a weakness in the US dollar. So we're seeing currencies such as the Aussie or the yen will have potential opportunities to rebound and regain their grounds as where we've seen it in the past few years.
You're not too concerned about the upcoming PCE preferred inflation gauge from the U.S. on top of the solid data that we've got recently?
I think the market is already pricing in a pretty a strong expectation that the rate cuts won't come in so quickly. So I think with the PCE print tonight, the Fed has already included that in the projection in their latest FOMC minutes, reflecting that the PCE will likely be quite similar to the December levels or slightly up. So, but at the end of the day, I think inflation's impact from tariffs on goods is starting to wane. So I think both the Fed and broadly the market expects inflation to be remain contained, and that would provide a bit more leeway for the central banks to consider cuts later in the year, but perhaps it won't be so soon because they still do need a bit more time to assess the impact from the 75 basis points cut from last year and how is that playing on both the job markets as well as on consumer spending.
Fabien, even as we talk about central bank variance potentially for this year, it's also about Asia tech variance. I guess not all Asia tech is created equal. What has the disruption and the market ructions in the past couple of weeks, even though Asia has held up pretty well, actually meant for the sort of buy opportunities?
I think if you look at the Asia tech market, it's not uniform, right? You've got the upstream players, the likes of the memory chip manufacturers like Samsung, SK Hynix, or the foundry manufacturers like TSMC. These are in the upstream, and they're actually benefiting from one of the concerns that investors are having in the US, which is the huge spends from hyperscalers. And if you look at the earnings reports from some of these upstream companies in Asia, they are talking about supply shortages, how their pipelines are pretty filled up, and they have to expand on capacity, etc. So some of these companies are actually benefiting from the concerns in the US. But at the same time, there are also software companies or IT consultant companies in China, in Australia, in India that are suffering from that AI disruption trade, where people are selling traditional SaaS companies irrespective of what's happening there, sell first, ask questions later. So that has also impacted part of the Asian companies. So I think there are definitely some divergence in performance. And I think it's very important to look at the valuations right now. So if you compare foundry manufacturers, for instance, we talked about TSMC, but in China, like the Chinese foundry companies, maybe valuations are a bit more stretched. So these companies are definitely more vulnerable to the sell-off than the ones that are more reasonably priced.
Fabien, good to get your insights on a day like that. Thank you very much. Fabien Yip is market analyst at IG International. We have more ahead on the Asia trade. This is Bloomberg.
We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
President Trump signaling limits to the diplomatic process as he sets a deadline for a nuclear deal with Iran. In fact, that cautious optimism over that initial round of talks this week really hasn't slowed the U.S. military momentum in the Middle East. The U.S. has amassed its biggest force in the region in years, despite further talks scheduled in 2 weeks. Let's bring in Becca Wasser, who leads defense coverage for Bloomberg Economics. Becca, so how big of a buildup are we talking about here?
We are talking about a very sizable military buildup. We right now see that there's there's one aircraft carrier off the coast in the Middle East that is accompanied by several destroyers. There are several destroyers which are also large warships with missiles that are operating independently in the Arabian Sea, the Persian Gulf, as well as in the Mediterranean. And the U.S. has ordered yet another aircraft carrier to transit to the region. That's, again, a significantly large ship with a great deal of air power on board, as well as accompanying ships that have a lot of missiles. And that's just the naval buildup alone. We're also talking about 50-plus fighter jets and support aircraft and really critical enablers like aerial refueling aircraft, as well as early airborne warning and control aircraft that are needed to actually carry out a potential sustained air campaign.
Becca, given this show of force coming at a time where the Iranian regime is also facing domestic pressures, to what extent are we, watching out for them being backed in the corner and then potentially taking very extreme course of action, including disruption to the Strait of Hormuz? And what are some of the possibilities that are being gamed out at this stage?
You're absolutely right to point to what could Iran's reaction to potential strikes be, or even just the threat of strikes. Here, I think the most obvious answer is the threat to U.S. forces at regional bases throughout the Middle East. That's one of the reasons why there's been such a heavy emphasis on the U.S. putting additional air defenses in the region, as well as some of the air defenses that the aircraft carrier can bring as well. Additionally, that air defense coverage can also extend to America's friends in the region. That includes Israel, Jordan, and some of the Gulf states. You did mention the Strait of Hormuz, and I think we've already seen some saber rattling from Iran with recent exercises temporarily closing parts of the strait. There, it's almost a rehearsal, if you will, for what they could do at greater scale if they needed to, in order to try and complicate global shipping, complicate oil prices, as well as U.S. freedom of maneuver. So ultimately, I think we're seeing threats to U.S. forces, threats to regional partners, as well as the potential for a greater and more sustained closure of the Strait of Hormuz.
Becca Wasser, who leads defense coverage for Bloomberg Economics, there with the latest on geopolitical tensions around Iran. And of course, we've been following the latest developments in Venezuela as well after the extraction of Nicolas Maduro in early January. Now we're getting breaking news at the moment that Venezuela's National Assembly has given the final approval to an amnesty law that could pave the way for the release of some of the nearly 850 dissidents still behind bars. Authorities have said that they've released about 900 people so far from a prison in Caracas, where detainees have long reported torture and other abuses. And all of this, of course, after that unprecedented crackdown following the presidential elections in 2024. We continue to watch the developments around Venezuela as well, Avril.
Yeah, as we watch these oil markets, certainly we saw a bit of that reaction when the Trump administration struck Venezuela and captured Nicolas Maduro. Today, it's really about the U.S. and Iran tensions, and you can see both in spot as well as call markets, you're seeing buyers in action. They are picking up that upside protection at a time where U.S. crude futures are above 66, and I think Brent was well above $70 a barrel. Joining us now is Claudio Galimberti. He is chief economist at Rystad Energy. Claudio, it's really good to see you. Talk to us and give us some perspective on a day like that, because what has also been interesting to me is even as we watch these developments unfold, U.S. amassing forces towards Iran, perhaps the market reaction is a bit more subdued compared to past episodes with Israel, Iran, and the conflict last year, and then more recently Venezuela. Talk to us about how maybe things are different or the same this time around.
Well, thank you for inviting me, Avril and Shery. Yes, I think that there are some key differences between, from a market perspective, between the situation right now and the last time we had military activity in Iran. That was during the summer, when there was a famous 12-day war involving the bombing on the nuclear side. The market right now is much better supplied than it was back at that point in time. So we have advertised that for the past 2-3 months, we have seen huge increases in stocks, albeit not necessarily all visible. So what we know is that the supply currently sits well above demand, and that creates a cushion to prices. But the difference is quite large. So what I see right now, with Brent well above $70 per barrel, currently trading at 71, is that the market is really expecting some military action is anticipating some military action in Iran. There is no other explanation. So we heard just a few minutes ago your correspondent, the security correspondent, talking about this massive, accumulation of ships, of military ships in the Gulf. So I think that the market right now is kind of anticipating another military action.
What is the size and scope that we should be keeping in mind here, the possibilities? I mean, we look at the sort of upside protection that we're seeing in call options, for example. Does this inform the sort of timeline we can expect if there is a military conflict, how long that would actually play out for?
Yeah, I think it's always good to look at things like the option market because it's clearly smart money, and therefore they may the information you can extract from there actually is potentially full of insight. So it's very difficult though when it comes to events like geopolitical events because they are notoriously idiosyncratic, if I may use a complicated term, difficult to predict, very difficult to predict. There is this thing called the famous fog of war, right? So if you look at just the past 20 years and the effect of military intervention in places like Iran, Iraq, Libya, Afghanistan, what you see is that it quickly gets complicated. So you start with some plan, and then things go in completely different direction. You may argue that the situation in Libya has not been stabilized for the past 15 years. So clearly the country has resumed producing oil at a level that was comparable to what we had before the 2011 regime change, but it goes back and forth. So they are still in a state of civil war, you may argue. Now, there is a very recent example, though, of apparent success, and that is Venezuela. So what we saw is that the removal of Maduro didn't degenerate into civil unrest. And the country, as a matter of fact, is now putting the barrels into the open market. So there may be reason for confidence in within the U.S. administration that a military intervention in Iran can go and be successful.
Exactly.
But
So,
I would caution that it's always complicated. Yes, please.
Let's talk a little bit about Venezuela, because that's also where we're seeing potentially a structural pressure on prices, right? Given, of course, the barrels that could be made available. So if you're looking at the oil market away from these idiosyncratic geopolitical risks that we really don't know how they will unfold, what is the market supply-demand balance telling us?
So the market supply-demand balance currently it's very unbalanced in the sense that oil demand sits at around 105 million barrels per day and supply above 107. So we are accumulating stocks at a speed of 2 million barrels per day. Most of them are outside the OECD. And these are the reason why the oil price is still relatively in a relatively range bound. Otherwise, if they would all be visible, the oil price would be under much more pressure. When it comes to downward pressure, when it comes to Venezuela, important to bear in mind that the situation appears to be evolving according to the plans that were set out by the U.S. administration. There is an important caveat, though, which is we shouldn't expect the country to produce much more oil anytime soon. So they have been producing around 1.1 million barrels per day. And we would be lucky if we get to 1.4 by the end of next year, right? So these are just to put things into perspective. So Venezuela could the expectation is that Venezuela could increase production, but that's a long-term proposition. Long-term.
Right. So let's then limit the geopolitical risk fallout potential here and just look at potentially the Strait of Hormuz, which, analysts are saying it's low probability, but potentially the most extreme. What would be the impact that we can expect short term?
Look, the Strait of Hormuz. I remember we were talking about this back in July again. It's always a tail risk, right? So 18 million barrels a day of oil go through the Strait of Hormuz. There's very significant amount of LNG from Qatar as well. Therefore, any block of the strait by Iran, because it would be Iran that does it, would generate a huge price spike, and potentially well above $100 per barrel, depending on the duration and depending on the degree of the disruption. But we need to bear in mind that it's very unlikely. It has not happened in the past, and it would be you would have the entire world, right? Not just the United States, but even China would hurt tremendously by high oil prices. Therefore, there would be a sort of international coalition to ensure that the strait is not blocked. Now, there are, though, important scenario in which the price would still spike, even if the strait is not affected.
Yeah.
And this is a situation in which...
Claudio, we're running out of time. But we do understand your point that is very high stakes for Iran. Claudio Galimberti, really good to have you with us, Chief Economist at Rystad Energy. We'll leave it there. We have more ahead. This is Bloomberg. We have breaking news out of Japan. We're getting the latest PMI numbers coming in for the composite at 53.8. This is a preliminary number for the month of February, and it's actually improved from the previous month. We have seen the PMI composite stay above that 50 threshold of expansion since March of last year. You can see the manufacturing PMI also at 52.8, an improvement from the previous month. The services PMI also at 53.8. And all of this, of course, Avril, as investors are still digesting the latest inflation numbers, which have slowed from the previous month and fallen below that 2% level for the first time in more than 3 years.
Absolutely, Shery. But let's also talk about some of the movers in the stock market today, because we are tracking Sumitomo Pharma shares. And this is following on from the Japanese Health Ministry panel endorsing conditional approvals for regenerative therapy. So this includes Sumitomo stem cell treatment for Parkinson's disease. And we saw the shares of Sumitomo Pharma rising as much as 7% earlier, but they are reversing for the moment, and actually the drag now that is on the Nikkei, the benchmark, Shery.
Yeah, and also another stock that we're following today, Japanese semiconductor, chemicals, and advanced material supplier Resonac. In fact, it's been outperforming the Nikkei 225 and an index of U.S. chip stocks as well over the past year. It's gained more than 50% or so in 2025. The company just reported earnings this week with its full-year operating income forecast missing estimates. Let's get more on the results and the outlook for the sector. Joining us exclusively is Hidehito Takahashi, President and CEO of Resonac. Thank you so much for joining us today. And I said that the guidance missed estimates, but when it comes to the semiconductor sales, it was an increase of 14% or so from last year. What's driving that strength?
Yeah, okay. First of all, thanks for having me, and it's great to be here, Shery. I think our sales for semiconductor materials, the percentage of sales to AI-related materials are around 20% last year, and it's going to increase 30% this year. So our semiconductor-related materials performance is led by these AI-related materials.
Semiconductors for which device and applications are there different levels of strength?
We have a relatively strong materials for AI package, and we have, the high band memories, insulation materials, and also thermal interface materials. These are the two good performers, as well as our copper clad laminate, which is the base material for the substrate of this package. I think we have around 95% shares on the AI-related package.
We have seen some costs rising, though. Is that a concern?
Yeah, we are passing that cost increase into the customers, and we actually announced 30% price increase for these copper clad laminate materials.
Some of your biggest customers, the likes of Toyota, Tokyo Electron.
Well, actually, our biggest customers for semiconductors are like TSMC, Samsung, and Intel of the world.
Hidehito-san, talk to us also about how the impact on the substrate market also is potentially affecting, perhaps speeding up the uptake of advanced materials, and how is that exactly affecting your material costs?
Well, material cost, actually, everything, materials are increasing, costs are increasing. As I said, I am passing that, cost to the customers as much as possible, trying to maintain our margin. And AI-related, package increase or demand increase is very strong this year, starting from last year, actually. And this year is also very strong. So I think we are confident that we'll be catching up with the, cost increase to the price increase.
How closely are you maybe watching some of the rises in energy prices this week in particular as a read-through into your material costs?
Well, we are, of course, watching energy costs and so forth, but it's not really, directly affecting, impacting our materials, because our energy consumption for semiconductor materials are not that huge.
We know that different segments of the global economy are performing differently. I mean, the AI demand, data center, semiconductors are doing pretty well, but then the likes of autos, not necessarily. Is that sort of what you're seeing in your customer demand as well?
I think you're right in the sense that, we have some good spots and bad spots. And however, as far as semiconductor materials segment are concerned, which is the leading segment for our profit and sales, especially for the profit, I don't see any sort of weak spots globally. China is doing great, and U.S. is doing great, and Southeast Asian countries are doing great. And as far as AI-related materials and AI-related packagings are concerned, also data center demand is very strong. We have a hard disk media business, and hard disk demand is also increasing very strongly because of that data center.
Tell us a little bit about the U.S. market, especially with the Japan-U.S. trade deal. Are you going to be investing perhaps through some of those channels?
We need an ecosystem to be established in the U.S., which means usually semiconductor value chain, it starts from semiconductor company and the equipment company and front-end materials. Back-end materials usually comes last. So we'll see how that ecosystem is going to evolve in the United States, and if there is a necessity, we'll invest in the United States.
When are you going to review that?
Front-end materials are not there yet, and we don't have any back-end ecosystem. So if we go alone into, that U.S. market, it doesn't really make sense. We need a lot of partners, to go in together.
Are you having those discussions right now?
No, it's not really. We are having a discussion with the partner to go into the States. I think it's naturally evolving into that, depending upon how strong that U.S. Semiconductor manufacturing demand will be.
Do you see a timeline? Because right now the U.S. government is investing so much in that sector.
Right. Well, I don't really see the timeline, and I rarely see it is necessary to go into the United States in the near future. We are exporting from Japan to the States, and it's usually via someone else, meaning our customers are in Asia a lot. We sell materials in Asia. Those Asian companies are exporting to the United States. So it's really not really a direct investment in the United States near future.
How difficult has that relationship been with China given the geopolitical tensions?
We have relatively good outlets, locations in China. So what we're doing is make in China, sell in China. And Chinese customers are very strong, growth. We see a lot of growth in China for semiconductor, especially Chinese customers. So we are, of course, marketing into those customers, leveraging our supply chain, locations in China.
Are you seeing any pressure given the geopolitical tensions, whether it's with the U.S. or even with Japan?
I don't see that much pressure for the back-end materials because when you talk about semiconductor, the pressure usually starts from equipment. And then maybe front end, and then lastly back end materials. So I don't see any pressure at this point.
How important are rare earths for Resonac, given, of course, the restrictions that we're seeing also from the Chinese government?
We have maybe a couple of materials, importing from China, rare earths, but our usage is minimal, and also we're looking for the second, third source all the time.
Where?
In Australia and in some of the European countries.
How long could it take you to diversify?
I don't think it's going to take that long. So I think it's a matter of specification, if we can get a spec from the customers or not. So I probably in a year or two, we should be able to procure from other countries.
But all of that really leading to more just price pressures, no?
Not really, because our usage of, again, as I said, our usage of those rare earths are minimal, and it's only for a couple of products.
When it comes to the fact that you're also a very new company, right? 2023, and the fact that you merged, how is that adjustment going and integration within Resonac right now, and what are your future steps?
Yeah, we merged, Showa Denko and Hitachi Chemical merged in 2023, and we are doing relatively good on the portfolio end. We are divesting a lot of businesses. In fact, I will have divested 18 businesses, starting from 2022 by the end of 2026. So we're shifting our portfolio from conventional chemical to semiconductor materials.
Oh, great. We'll have you back for an update on all of those divestments and a change in your business. Hidehito Takahashi, really good to have you with us. Thank you so much for making the time. He's the president and CEO of Resonac here in the Tokyo studio. Let's stay with the tech sector, because OpenAI now saying it has visibility into its future chip needs, even as the industry faces a supply shortage. Its chief global affairs officer also told us democratic nations need to develop shared safety standards for AI.
Democratic AI is going to prevail, or if the world's going to build out on democratic AI, I do think the world does need to work together collectively to make sure you're addressing and identifying the elements that are going to be needed. And look at, we are, and I know you guys talk about this and cover this, right, in a unique and perhaps challenging geopolitical moment where I actually have some optimism in terms of where the world's going, particularly democratic world. Is that we all are going to have to work on this together. Democratic societies do need to start to develop shared safety standards on this technology. You're seeing emerging AI safety institutes, US, UK, Japan, Australia has an early version, India is thinking about an early version. And he talked about, can we think about this as some type of analog to the IEAA, the International Atomic Energy entity. But I think those are the types of I think muscles that we're going to really need to develop to ensure that democratic AI does get built. But inclusive within all of that too is how do we all work together, particularly on the supply chain piece.
But as it stands now, do you see this chip shortage deepening further? And will that slow down the AI build out? From your perspective, how does it look?
From our perspective, I think, we feel confident that we have visibility onto what we are going to need. Now, we also make sure we sleep with one eye open, right? Because you want to continue the old line, trust but verify on all of this. We ourselves are, working with a variety of really strategic partners who are, really supportive of us in terms of access to chips. We ourselves think about how do we impart our knowledge on chip design.
OpenAI Chief Global Affairs Officer Chris Lahaney speaking with Bloomberg Inside anchor Haslinda Amin in New Delhi. Meanwhile, the CEOs of OpenAI and Anthropic appear to snub each other during a photo opportunity at the AI Impact Summit in New Delhi. Sam Altman and Dario Amodei refused to hold hands despite standing side by side in a moment that quickly spread on social media. Amodei previously worked at OpenAI but left to co-found his company as he felt that OpenAI was becoming too commercially focused. And again, a reminder of our new online feature, the Bloomberg Video Hub. Subscribers can explore live streaming news, interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check that out at bloomberg.com/videos. This is Bloomberg. We're looking ahead to Hong Kong markets reopening after the Lunar New Year holidays. Bloomberg Asia stocks reporter Sang-Mi Cha is with us to share more on what to expect going into today's session. Sang-Mi, so we've been seeing Chinese markets lagging Asia so far this year. What are you watching in a week where quite a lot has happened as trading resumes in Hong Kong?
That's right. MSCI China Index is up barely 1% this year. That compared to MSCI Asia Pacific Index, which is up about 12%, is a huge lagger that we're seeing here. But of course, now as the holiday is past and then the Hong Kong market is coming back, we're focused on the passenger travel, which was up about 4% year on year. So that we're talking about 4 billion here. And air travel was also up 6%. So it was pretty solid, the numbers that we're seeing here. But the consumer story here is uneven because, for instance, when we look at the hotel bookings, it was actually the mid kind of economy hotels that did really well, not the upscale and luxury hotels. So people are traveling, they're definitely moving around, but the wealth effect is just not there. And so we can actually also see the box office numbers, which was 4.5 billion yuan last year, and that has come down to about just over 2 billion yuan. And so that's about 50% haircut, and that is quite significant here when it comes to the consumption story. So again, the focus is going to be on the travel spending and especially the consumers. So it's constructive again for some of these mid-scale hotel and the online agencies.
Sang-Mi, what about the AI theme? Of course, it continues around the world with tech sell-off and volatility in that sector. What can we expect in China?
I think we could kind of go back to the holiday data again. So it was pretty significant. Alibaba has seen 130 million users actually order some of the goods directly using their Quen AI app. That was pretty significant. They were ordering milk teas and travel tickets and movie tickets and so on. So that is quite significant here. Of course, Tencent's Yuanbao app also saw about 50 million daily users. So this is very important when it comes to monetization potential here. But of course, I think there has been really growing enthusiasm among the investors when it comes to the AI startups in China. We're talking about Minimax or Zhipu. These companies have rallied more than 400% from their IPOs back in January. So there is definitely that enthusiasm. But of course, we're also going to be looking at how Moonshot is going to be coming later to the market with the valuation of about $10 billion.
Sang-Mi Cha, Bloomberg Asia equities reporter, as we look ahead to the market opens there. Let's turn to the RBNZ. Governor Anna Bremen says core inflation is running cooler than the headline CPI suggests, with underlying pressures now stable and sitting inside the target band. Let's bring in Bloomberg economist James McIntyre for more on this. And James, this was, of course, her major speech since becoming governor. And of course, we had the RBNZ rate decision hold as well. What were your key takeaways from here?
Yeah, thanks. So it was interesting to see Governor Bremen's first big speech, and she really took some time to lay out where an inflation-targeting central bank like the RBNZ is seeing inflation right now. And it's quite clear, not only from those comments about core inflation, but the way the governor went through all of the trends around different parts of the inflation basket, tradables, non-tradables, administered prices, that the central bank really spelling it out that they see where inflation is right now as a bit of a blip, and because of where they see the economy is, a lot of spare capacity and an elevated unemployment rate, that they see that there's room for the economy or to ride out that inflation blip right now, that it should fade away sometime soon. Core measures aren't there, they don't see a big problem, and that they're going to be very, very patient over the course ahead.
So it sounds like they expect there to be growth without inflation so much of a challenge. What is that going to mean for the next move that we can expect for the RBNZ?
Yes, that's it. So they very much, the key message that not only from the statement on Wednesday, but reinforced in the speech, is that they feel that there's room for the economy to move. The unemployment rate's elevated. They can grow without those inflation pressures bubbling up. And so when it comes to the question of whether the RBNZ might be following the RBA's direction and beginning to move to hike this year, that becoming a little bit more dovish or a little bit more circumspect on that from the RBNZ. And that's important for them because short-term interest rates, especially that 2-year bond yield, that's a really key measure in New Zealand's economy for mortgage rates. If they want consumers to continue to recover and the current low interest rates to continue to stimulate that economy so that it can eat up that spare capacity, they need those bond yields to stay low, and hence some of that dovish tone we're seeing from the governor.
James, great to hear from you today. Thanks so much for bringing us the latest on the RBNZ and Anna Bremen's first major speech. Bloomberg Economics economist James McIntyre. We have more ahead on the Asia trade. This is Bloomberg.
Apollo Global Management is looking to provide private capital to fill a crucial niche in Japan's investment landscape. CEO Mark Rowan spoke with Bloomberg Television's David Weston for Wall Street Week.
Japan is I would say like many economies. If you think about the structure of the Japanese market, it is primarily two financial products: bank debt and equity.
Apollo CEO Mark Rowan sees his company as providing a much-needed third way to finance the capital investment Japan needs.
The equity market in the context of the world is actually quite small, although it is the second largest equity market in the world, but it is roughly the size of NVIDIA, just to put things in perspective. There's not the well-developed, kind of corporate bond market that exists throughout the U.S. And so I think what we're watching, not just in Japan, but around the world, is corporate CFOs, corporate treasurers now understand that there are three types of finance. Things that are really highly rated and short, you want to be with your banks. There's no better provider. Equity, very, very expensive. Public markets, for plain vanilla, very, very good execution. Everything else comes to the private market. The largest part of the private market today is investment grade. It is these large companies who have these transformational opportunities, who want to match long-dated investments. And most of what we're doing is long-dated with long-dated capital. And that is not what the banking system does well. That is not what the public markets do well. And so you're seeing this extraordinary growth. In the US, we've seen it in lots of ways. Meta's financing last year at some $30 billion. In Europe, we've seen the Europeans, who also have structural issues vis-a-vis capital availability, really embrace private finance. In Japan, we're seeing the beginnings of that.
Apollo Global Management CEO Mark Rowan speaking to Bloomberg's David Weston. Catch more in a special edition of Wall Street Week from Japan, Saturday airing 7 a.m. in Hong Kong, 8 a.m. in Tokyo. Let's take a look at how markets in the region are faring on a day where the stock benchmark is sitting lower, reversing yesterday's bounce, and it's really the energy-related stocks that's helping to cap those declines. Consumer names are not doing so well today, even though the Kospi is keeping its head, again, still above water for another session. That continued outperformance of South Korean markets on a day where, even though there is perhaps a bit of demand for havens, we saw following those Japan CPI numbers that reversal in the yen strength. Watching as well, Hong Kong markets at the open. They're back online today. This is Bloomberg.